I'm not sure everyone understands or knows how to use a lot of the lines that I may draw, like support and resistance lines. So I just wanted to go over today probably how you would have used those to play for puts on what would have been a really easy play, the gap fill today, down on the SPY. And so really at open, you can't really see a whole lot, like you're not really sure probably exactly what to do. You can go to between the 1 minute and 5 minute and you can tell, I mean, in my opinion, it wasn't safe yet to jump in for puts on the gap fill. But so what I waited on was looking at the 5 minute candles, saw that we have like a little bit of a level right there that's starting to establish something that could break, and so I waited for that to break. And then you could have entered puts right there, but the real good confirmation was when it came back up to this level and bounced off of it. And that was a confirmation that you're on a downtrend because it tried to break back, into the uptrend, and it wasn't able to. And you already know with this gap down that thing's just going to be drawn to it. It's drawn for it to fill. That's what it means when you have a gap. And so once it entered that, you would have just stayed in puts. But and these levels, how you play them is all these levels are just places where the market is likely to take a turn or bounce. And so I've already drawn all the levels for you here. You don't have to go back and get them. If you knew where these levels are ahead of time, then you just use them to manage your risk. So like on this, when I would have jumped in right here for puts, you just would use this to manage your risk. And if the SPY work above here, you'd probably want to sell because that'd be a bullish trend. And then on the way down, you had another level. And as it broke through that, you would keep holding your puts. It broke right through it, so you didn't have to worry. And then it came down here and hit another level. So you're going to expect that the buyers are going to put up a little bit of a fight. And so it went back up. And then right there, that level got rejected. Same thing got rejected, so you didn't have to exit your puts because it didn't break back above it. It didn't ever really start an uptrend. And it kind of did that all the way down. So you're using these levels to manage your risk. And once it goes, like if you're playing down, like once the SPY got down here, you use this one to manage your risk. And you do that all the way down. And once it starts to break back above a support or resistance level, then, the trend is starting to reverse. And it didn't ever do anything until it reversed right here. And you get that pattern that, I'm always talking about. But really, I mean, the easiest play was you had the gap fill. You could have got out there safe. And then you were counting on a reversal, which you did get. And usually you get a reversal after the gap fills. But anyway, that's just how you use quick video and how you use the support and resistance to manage your risk. You use these as risk management levels and to show you where to enter trades. So if you have any questions about that, just ask me. But I just wanted to kind of clear up that that's what all these lines mean when I draw them. So like when I had this line from this morning, if the SPY would have broke back above that, probably would have entered calls. And every time it breaks one going down, it's getting more and more bearish. And so anyway, that's how I use those. Hope that helps some of y'all.